The prices of global carbon commodities like natural gas, coal, and oil have been soaring recently. And the resulted costly electricity bills have been ripping through almost every part of the global economies and financial markets. A few Chinese vloggers on social media mentioned that this is part of China's strategical attack on the US economy with hyperinflation. Strategical attack my ass. Today, I am going to unveil the real causes of the recent price hike of the carbon commodities, and provide you with some related long-term investment ideas and a potential stock to own. In short, the shoot-up of the carbon commodities are due to the synchronized global efforts to transition to green economies or the so-called net zero emissions. Just to lay out more context and my logical reasoning, in order to achieve the green transition, many major global economies have implemented restrictions or limitations on the energy production capacities which use dirty resources such as coal and natural gas, or as I call them, the dirty capacities. China's production caps and EU's fixed number of carbon credits are good examples here. As global demand recovered quickly in recent months thanks to fiscal stimulus and reopening, demand for energy and electricity, especially for goods production, also surged. However, renewable capacities are far not enough to meet the increased demand. Renewables today are neither easily scalable nor consistent enough. As a result, the massive overflowing demand for energy has no choice but flooding into the dirty capacities, which are highly restricted or limited by many policymakers currently. Barring any quick and meaningful policy adjustment in the short terms, the prices of the dirty carbon commodities and the respectively produced electricity thus skyrocketed. I do not think there is much value to dissect the near-term stock market volatilities, which I think will be rather short-lived, as I expect appropriate policy responses soon, or tell you to put some of your money into crypto to hedge inflation, which I already did. Instead, I want to provide some long-term investment ideas. As you can see, the key solution to the aforementioned issue is to make renewable energy more consistent and easily scalable. We can get there by building smart and comprehensive energy storage systems and solutions, and developing connected grid infrastructures and management services, which I think is a great area to invest for the long term. The stock I think you should pay attention to or consider investing is STEM, who is the market leader in the smart energy storage and connected grid management space with significant first-mover advantages and market-leading technologies which have been endorsed by many reputable customers. More importantly, unlike most other SPOC stocks, STEM actually managed to not only meet but comfortably beat the top-line growth expectation as advertised in its investor materials, with an even much faster growth in new business bookings in recent quarters. Lastly, the valuation has come down quite a bit after recent pullbacks and better financial performance. It was trading at like 30x price to sales. Now it is only 10x. Don't get me wrong, it is still very expensive, which is why I only have a small position as of now. I also recommend you to start with small positions and watch it closely. That is it for today. Thanks for watching.